In early 2016, the FASB issued a new standard intended to improve financial reporting about lease transactions. In this video, we'll demonstrate how organizations that lease assets, referred to as lessees, can apply the new standard. Specifically, we will look at the scope of the new standard, what's changing or not changing, and how easy it is to put it on the balance sheet.
Similar to existing GAAP, the new standard only applies to leases of property, plant, and equipment, or things like land and depreciable assets. And then to determine whether or not the guidance applies or whether you are in scope, you have to first determine whether the contract contains an identified asset. An identified asset exists when it is either explicitly or implicitly specified in the contract, and the supplier cannot have the practical ability to substitute the asset, or if it does, it cannot economically benefit from such substitution. Now, also, the lease contract must convey the right to control the use of the asset during the term of the lease. In other words, to determine how and for what purpose the asset is to be used during that lease term. This control must provide two things. First of all, the decision-making authority over the control of the use of the asset, and then also the ability to obtain substantially all of the economic benefits of the use of the asset.
The definition of a lease in the new standard is very similar to the definition under current GAAP. However, this new standard uses the concept of control. This is very similar to the new revenue and consolidation standard. In the new leases standard, control is determined by having both a power element and a benefits element. This is something that is different from current GAAP.
So the question that everyone asks is, what will change with the new standard? And what will change primarily for lessees is that for the first time, operating leases will be put on the balance sheet along with capital or finance leases which are already there. So for leases that have terms of greater than 12 months in duration, lessees will recognize both assets and liabilities on their balance sheets. Now, in current GAAP, an important distinction was whether you have an operating lease or a capital lease, with operating leases being retained off the balance sheet and capital leases being on the balance sheet.
Lessees will recognize right-of-use assets and lease liabilities for both types of leases. This is a change from current accounting, and this puts the focus more on what is the definition of a lease as opposed to whether a lease is an operating lease or a finance lease. Because lease classification is very similar to current GAAP, the FASB expects that most current capital leases will be finance leases under the new standard. An example of a finance lease would be a lease of equipment for most of its useful life. The FASB also thinks that most operating leases under current GAAP would be operating leases under the new standard. An example of an operating lease would be a lease of office space for 10 years. The presentation in the income statement and the cash flow statement is not expected to change from current GAAP. The main change under the new standard is the recognition of assets and liabilities for operating leases.
For operating leases, it's not too difficult to measure the lease liability and asset. In fact, in many cases, the information that is necessary to do so is already required to be disclosed under current GAAP. We call this the display approach, and it's an easier method for lessees to apply in order to record the appropriate amount of lease liabilities and related right-of-use assets.
Lease liabilities are calculated by taking a present value of the remaining lease payments discounted at a discount rate determined upon the lease commencement. To calculate the right-of-use asset, you would start off with the balance of your lease liability, then you would add any unamortized initial direct costs, you would add any prepaid rents, subtract any accrued rents, and also subtract any remaining balance of any lease incentives that were received. That will give you the calculation of your right-of-use asset, and all of these elements will then be used to do a topside journal entry at the end of the reporting period.
The FASB is ready to answer your questions about the new leases standard. Please submit your questions using the technical inquiry form located on our website, www.fasb.org. Thanks for tuning in.